Are you ready, Canada? Because you know what time it is. It's boom time. Boom to knowledge and boom to next level information. I'm going to provide you the Bank of Canada's interest rate announcement. Then I'm going to provide my review and what it means to all of you.
I truly believe, and people throw the word around dreams. It's all about dreams, And by the way, dreams cost nothing; they're free. The hard part is just keeping them going, and please keep them going because we're here for one simple reason. You believe in the dream, I believe in the dream, and our dreams come true. And there's no reason every one of yours can't.
Today we lowered the policy rate by 50 basis points. This is our fourth consecutive decrease since June and brings our policy rate to 3.75%. We took a bigger step today because inflation is now back to the 2% target, and we want to keep it close to the target. Now our focus is to maintain low, stable inflation. We need to stick the landing.
They tried their hardest to paint this magical picture, and the government and media gobbled it all up. We heard almost on a daily basis Chrystia Freeland coming out and saying Canada is the strongest country in the G7, and next year we're going to have the fastest and strongest growth in the G7. These are the same people that told us that interest rates would be low for a very long time and we should buy that second property and that beautiful big vehicle. Then inflation hit us, the worst in 40 years. They said at the time it was only transitory and it would just be a couple months and then it would drop right back down. Sure, we're back down today. But that's after everything seems to have gone up by 100%, like rent, food, mortgage interest costs, you name it, it has gone up, which has destroyed Canadians' purchasing power. The Bank of Canada was late at raising interest rates when inflation surged and ran rampant. Then they rose rates at the fastest pace in history, but they weren't done there. They decided to raise rates another 2 times last year, which I believe was a policy error. Why do I think that way? It's because a lot of people don't understand it takes 18 to 24 months for interest rate hikes and cuts to work through the economy. What that means is we're just starting to feel the full effects of the jumbo hikes that the Bank of Canada did 2 years ago. So those 2 last interest rate hikes last year were negated by the 2 or 3 interest rate cuts that they just did. That leads us to today. This 50 basis point cut today is an emergency cut, and it means that there's an economic slowdown, rising unemployment, and the devastating consequences that follow. For the people out there that don't believe me, please explain to me what part of our economy is booming right now or about to boom. The only economic upswing we've heard is from Chrystia Freeland's mouth. But when you look at the data, it paints a completely different story. First, the only thing that's been propping up the Canadian economy for the last 2 years is our record immigration numbers. Now that we're seeing a rise in unemployment, we're going to see those numbers come crashing down. So we're not going to be benefiting from all this immigration like we did before. The government announced last month that any market that has unemployment rate above 6% will no longer be able to take on applications for temporary foreign labor. There are only 3 provinces that currently have unemployment rate under 6%, and the Yukon and Northwest Territories. So yeah. How's new construction going across Canada? There is a massive slowdown, and more predominantly in major markets like Vancouver and Toronto. And what's going on with real estate sales across the country? We are currently in a Siberian winter. And yes, the market that was the hottest across Canada was Calgary, and it is now cold. Yes, it's not booming anymore. I will be providing real estate market reports in the coming weeks, so stay tuned. They're going to be excellent. Let's not forget about manufacturing. That is slowing right down, and business insolvencies are going up. Personal bankruptcies, those are also rising. And credit card debt has reached all-time highs in Canada. The Toronto condo market is imploding right now, and we don't have any energy projects that are currently under development, with our government basically scrapping everything. You know, the world came to Canada and asked for our natural gas, including Germany, and JT said there is zero business case. Are you kidding me? And let's not forget about our best friend and major trading partner, number one trading partner, the US, which is currently going into an election, which is going to affect Canada. If Trump is elected, he's going to unleash a massive series of tariffs, and it's going to affect the Canadian economy. That is, if he's elected. Oh yeah, and the US is most likely going to hit a recession in the next 7 to 12 months. Why do I say this? Because the 2-year and the 10-year yield curve were inverted for nearly 2 years, and it was the largest inversion since the Great Depression. The yield curve inversion predicts recessions nearly 100% of the time. But the recession does not hit until the yield curve uninverts, which occurred on September 4th. So now it's just a matter of time before things go boom. Just so that people are aware, real estate doesn't go bullish when your neighbor or you are losing your job. I just want to mention one thing that's extremely interesting. This government should probably call an election right now, because if they don't, they will be going into an election with a crumbling Canadian economy, and they don't even know it. I will be providing lots of updates on real estate, the economy, mortgages, and politics, because they all affect each other and are intertwined. Stay tuned. I'd love to hear from you in the comments section. What are your thoughts? Thanks for watching.